Hello, good morning, everyone. Let's confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly, please type in hi in the comment section. And please, I would like to see some more details regarding my sound quality, as I noticed that the audio was a little bit clipping during the live session yesterday. Please let me know if there are any feedback. Okay, so what do we have right here? Okay, I can see Monique. Good morning, Monique. Miyagi, good morning to you. Glad to have you around this morning. Hey, Carrie, how are you doing today? Happy day. Good morning, Carrie. Thank you very much for being around. And I can see that name here. It's I think it's as Chinese, but good morning to you. And okay, thank you, Miyagi. All right, thank you. Thank you, Carrie. Thank you for that confirmation. Betty Life, how are you doing this morning? 679, thank you. Good morning to you all. So I will take this as a positive feedback that we are good to go this morning. I'm so pleased to welcome you all to yet another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunity lining up for us today. And for those who are joining us for the first time, I'm so excited to have you guys around. What we simply do here is to gather here as a community as we get prepared ahead of the New York session. So we have series of financial instruments that we have been monitoring since the beginning of the week, and what we simply do here is to come here on a daily basis to do follow-up details on this pairs. So we look out for trading opportunities. We also look out for how to manage our existing positions as we take on more new fresh look into the financial market. So you are highly welcome. It will take quite a while for you to gradually adapt to this process, but just take your time, stay tuned in through to the end of the session, and try to join us on a daily basis, 11 a.m. West African time, 10 a.m. UTC, and I assure you that with time you will get to understand how this works, and you will be able to use the information you have gathered here to make your own decision on this instrument. So welcome once again as we dive right into the business for today. So the first thing we normally do as usual is to run through the economic calendar, as we want to keep tabs with the fundamental aspect of the market. As you all know, we need this event to help us drive price movement. Without price movement, we cannot make money, so we still need some catalyst. So despite the fact that we have positioned ourselves, we still need some catalyst that will drive price movement, and that is why we always ensure that we keep tabs with the fundamental aspect of the market. So going into the economic calendar here, for today, Thursday, April 20th, we only have two high impact events today, and none of them is affecting any of the instruments that we have been monitoring since the beginning of the week. But we are going to take a little consideration of the Bank of Canadian's governor's speech, that is Mark Lem is going to be speaking in the next 5 to 6 hours from now. And the reason why we are going to be considering whatever he says here is because of the fact that the Canadian dollar shares a little correlation with the US oil commodity. And because of this, we want to see the health situation of the Canadian dollar, so that we can also have a perspective into how we want to be managing our US oil. So we are going to be looking forward to that one as well, and we might likely see some reflection on the chart in anticipation of this event, probably some consolidation on the US oil. So all this detail, we shall look into it as we dive into the chart. So with that being said here, let's dive right into the chart right now. And the first commodity we are going to be looking at this point, as usual, is the US oil. And I'm so excited to let you know that the US oil has happened to be the most profitable trade on the instrument that we have been monitoring since the beginning of this week. As you can see here, we have been selling the US oil since the beginning of the week as price action has continued to find lower lows and lower highs. So let's run through how the week has started for us on the US oil. So we saw the situation here at the beginning of the week after we identified a simple flat channel when price action was trapped within the $82.60 level and the $82.20 area. And you all know what we look out for whenever we have this kind of simple setup. We want to wait and see price action to either break out of the resistance line or break down the support line for trading opportunity. And on that same Monday, prior to our live session on Monday, we saw the breakdown of that support line, and then price action came back to do a retest of the structure that was broken. And during our live session on that day, we all agreed that we are going to be having a sell stop order right below the support line of that flat channel to be part of the bearish move to the downside. And a couple of hours into the New York session that day, we saw our position triggered, and luckily enough for us, we also had the opportunities of having multiple entries as we identified structures like the $81.75 level, the $81.50 area, which happens to be our key level at the beginning of the week. And we also had structures around the $81 level and the $80.60 level, where the breakdown of the structures also welcomed more trading opportunity. Then of recent, we had the breakdown of the $80.60 level yesterday. As you can see, we had many structures here which gave us opportunities to add more position to our existing trade as we continue to ride the move all the way to the downside. And though we had a choppy situation here yesterday, but it was not too worrisome as we saw price action continued breaking down that $79.25 level. So it has been quite a profitable week for us, as at this point in time, if you had followed all the structures duly, you would make at least a minimum of 500 pips on the US oil so far this week. And for those who had been part of this profitable journey, well done, and kudos to you for being on standby to have caught these opportunities. So well done, guys, and let's see what our plans is going to be like for today. And for those who had missed out on these opportunities as well, we are going to be checking the charts today to see if the market is still going to be going bearish, or we might be getting ready for a reversal pattern. So all this we are going to be looking at, so I advise you to stay tuned in so that you don't miss out on any of these ideas. And for those who still have a sell positions running, that is, if you're still running your position right now on the US oil, well, as usual, you all know what we normally do when price action has moved significantly well in our favor. We want to be moving our stop loss, lock in some profit, secure the current position, as you don't want to lose out on whatever you had made so far. So at this point, I will be suggesting that we have a structure at around that below the $78.40 level, which seems most appropriate to have a stop loss at this particular point in time, as we want to give room for price action to breed with the hopes that we might be seeing a retracement back into structure that will incite another wave of bearish momentum. So with that being said here, and you have moved your stop loss, secured your current position, let's see how we intend to find a trading opportunity today. And before we go into the details of what our expectations will be like for today, I want us to have an holistic perspective of what is really going on in this market. And to do that, we want to scale up into the daily time frame so that we can have an holistic perspective, and at the same time it would also give the newcomers a leverage to be able to be part of the idea here. And we also want you will also be able to have a better understanding of how we got to this point. So right now we are back into the daily time frame right here, and if we zoom out from this structure and go to as far back as about 8, 9, 10 months from this current moment, you would agree with me that price action has been bearish in this market. And if we take into consideration what has been happening since the month of July last year, connecting the series of lower highs, we had this beautiful bearish trend line which has consistently been respected by the sellers at every point in time. And when we fast forward into the month of November, we saw our price action, though it has been bearish, we had a scenario where price action was trapped within a channel between the $70 mark and the $82 area to emphasize the level of indecision at that particular point in time. And in the last couple of weeks following the OPEC Plus decision to cut oil production by 1.6 million barrels per day in total, which dovetails to about 3.6% of the total global demand, which is on the high side, we saw some signs that we might be seeing a skyrocket in the oil prices. And a couple of weeks ago, we saw this huge bullish gap before the beginning of that week there to emphasize that buyers might likely push price to the upside. But one interesting thing happened during the course of last week. We saw how price action broke out of the $82 level, which happened to be the first time price action would ever break out of that structure in the last 5 months. As you can see how that level has been a strong selling niche in this market since the month of November last year. But last week we saw the breakout of that structure, which actually gave us a sign that we might be seeing a bullish momentum. But one thing we saw here that made us to be careful about jumping into conclusion was the fact that the breakout area also shares a beautiful confluence with a bearish trend line that has been supporting that bearish momentum since the later part of second half of last year. And because of the scenario, at the beginning of the week, we decided to scale down to the lower time frame to understand how participants in this market will be reacting to the $82 level. And we concluded that the continued buy pressure above the $82 level will make the $82 area a platform for buying opportunity. But if we cite a breakdown of the $82 level, this was our agreement on Monday, that selling pressure below the structure will be a sign that price action is likely going to be respecting that trend line one more time, as it has always done since the month of July last year, to incite another wave to the downside. And as you can see right now, in the last 96 hours, we have seen our price action has been finding lower lows and lower highs in this market, giving us engulfing bearish candles along the way, hereby leading to the breakdown of that key level at the $80 level. And with the situation of things right now, I want to consider this to be a retracement of that impulsive move that started during the second week of the month of March. And at this point in time, I would want to see this probably retracement going into structure in anticipation of another wave of bullish momentum. Now the question is, how far will this retracement phase go before we start seeing bullish momentum in this market? So from a technical standpoint, whenever we want to project the culmination of a retracement phase, we want to be using our Fibonacci retracement tool, running it through the previous impulse leg, and aim at an area between the 50 and the 78.6% of that previous impulse leg to anticipate where the retracement phase is likely going to be ending. So for the sake of clarity, let's label this area as a potential TP target from a long-term perspective for the buyers, for the sellers. So we have a potential TP target here for the sellers. Let me put that in for sellers. And this area also will be serving as a potential buy zone if we begin to see a reversal pattern within that area. So we have a structure between the $74 area and the $68.50 level as an area where a long-term TP target for this bearish momentum could be. Then another thing I would like to state here is that remember that we have a structure even before price action gets into that TP target zone we identified here, and that is the trend line that we have here. Remember, we had the breakdown of this trend line I think during the second week of the month of March, as we saw here, and then following the OPEC Plus decision to cut oil production, we saw how price action broke out of this area with a very huge bullish gap, and there is a chance that we could see some culmination here as well. So we want to be mindful of this trend line as we continue to guide the bearish move to the downside. So whenever price action gets into the structure, we want to see how price action will be reacting to that level to decide if the bearish momentum will be going further to the downside, or we might be getting ready to join the second wave of that bullish momentum. So this is a very critical point in this market, and if we look at it closely, it falls around the $76 level. So we are going to be taking the $76 area into consideration too as well when we scale down to our lower time frame. So I would like to mark that out there so that we can remember that structure. So for those who are looking at who are in a sell position for a short-term perspective, you want to be aiming at that $76 area as a TP target in the meantime. But if you are looking at it from a long-term perspective, then it depends on how price action reacts to this level that will determine if we are going to be buying from that area. And if a breakdown happens, it might likely lead into the structure before the second wave of that bullish momentum will happen. So that is what we are looking at from a holistic point of view, and from a long-term perspective, this is what we are looking at this point. So we are going to be scaling right back into the lower time frame, that is the 1 hour time frame, where we want to position ourselves to enjoy the potential trend continuation to the downside. So we are going to be focusing on how price action will be reacting to the $77.50 level right now. And we should also consider, since we have a breakdown of the $80 level, we could still see price come back to retest the structure in anticipation of a trend continuation. We are going to be looking at that too as well. So with the information we have gathered here on the 1 hour, on the daily time frame, so we are going to be going down into the 1 hour time frame, where we are going to be seeing things more clearly and dissecting it a little further to identify more trading opportunities. So right back into the 1 hour time frame. So for the sake of simplicity and clarity, I would like to delete some of the structures here as we might not longer need them. So let me delete all those ones so that we can have a clean chart to work with, and then we can see things more clearly, and it will be more neater for us to relate with this structure. So we still have that key level there at the $81.50 level, so we are not deleting that. And let's delete this one too as well. Okay, delete this one too, and fine, here we are. So right now we have a descending channel which has been which has further emphasized the presence of the sellers at this particular point in time. So we can see lower lows and lower highs, and during the early hours of today we saw the breakdown of the support line of that descending channel, which is a sign that sellers are getting stronger as the day is going by. So what we are going to be doing here is to for me personally, I will continue to consider selling momentum here with that breakdown of that support line of that descending channel. For me, it's a very beautiful sign that sellers might still continue to the downside. And as a result of this, I had a position this morning at the breakdown of the $78 level after hitting the TP target there. And at this point, if you had missed out on this opportunity, I will be advising you at this point to remain patient, as you don't want to jump in front of a moving train. So it's appropriate that we wait for a retest of structure at one point in time to happen before we want to be joining another wave of bearish momentum. So with the breakout of the support line of that descending channel, you all know from a technical standpoint, whenever we have a significant breakdown of a structure like this, we expect that one point in time price is likely going to come back, do a retest of that structure in anticipation of the second wave in the direction of the prior leading price action. Now with the situation here, for those who are still on this trade, I told us all to move our stop loss, secure the current position, and let's wait out and see how price action will be reacting to this current structure. So in the last couple of hours right now, we have been noticing some buy pressure around the $77.50 level, which we also want to acknowledge at this point. So I will identify this area. So let's relabel that level. We have the $77.50 level. So we have a new support line right now, as we have been witnessing some buy pressure here in the last 3 hours. So will this turn out to be a retracement? So we are going to be looking at that. So we have this trend line here, which will be serving as our yardstick for trading activity today. So we want to see price action come into that structure, and if we start seeing selling pressure resume, that is, buyers find it difficult to break above that trend line, then we will have no choice than to get ready to sell, with another opportunity to add more position at the breakdown retest of the $77.50 level. I think I had a typographical error there, so let me relabel. So we have the $77.50. So that is one scenario about this whole situation here. So we remain patient. Let's see if this buy pressure we are observing here is going to take price action to the upside. Then there is a possibility that price could still go to as far as the $78.70 level. Remember, this was a structure that was broken during the early hours of today, so there is a tendency price will come into the structure too as well before a bearish move to the downside happens. And there is also a tendency that price could get into the $79.25 level, which shares a confluence with the resistant line of that descending channel to incite another wave to the downside. So we have a couple of structures around this area that we are going to be focusing on if a bullish momentum starts anytime soon. So we have structures at the $78 level, which shares a confluence with the support line of that descending channel. We also have the $78.70 level, which was broken during the early hours of today. We're also looking at that area too. And then we also have the $79.25 level, which also shares a confluence with the resistant line of that descending channel. So these are zones and key levels that we are going to be looking at today to guide a potential trend continuation to the downside. Now that we have this whole situation figured out here, another thing I would like to state here is what happens if price action does not continue to the upside, that it does not find higher highs instead, and instead it continues to drop to the downside. Then a breakdown retest of the $77.50 level on our lower time frame will be giving us an opportunity to join or add more position to our existing trade. Mind you, remember what I just said here. I said break down, scale down to your lower time frame, your 5 minutes, your 3 minutes time frame, look out for retest of structure, then we join that decline to the downside. Now that is how we are going to be selling the US oil for today. So those are the structures we want to see on this chart that will support a trend continuation to the downside. Now, in as much as we are looking out for selling opportunities in this market, you know how we do it here. We also want to consider the potentials of buyers in this market. Now, for me to buy the US oil at this point, I will want to see a breakout of this descending channel to happen. In fact, I would rather see price action breakout of the resistance line of that descending channel at the $79.25 level. If we look into the past year, you will see that during the New York session yesterday, we saw some bullish traction around that $79.25 level, which could incite a potential move to the upside from this level. And if we look at that structure here, it shares a confluence with the resistance line, and if a breakout of that level happened, a breakout of the trend line would also have happened there to reveal that the trend line may no longer have the capacity to continue to hold bearish momentum. So I would want to see price action take out all the sell positions there, and if we are lucky enough, appearance of buy pressure above the structure on our lower time frame will welcome more opportunities to buy the US oil. Now the question that will be asked right now, especially from scalpers and counter trend traders, is that are we going to wait all this distance for us to join that bullish move over 160 pips move before we join that bullish move? Of course not, if you are someone comfortable taking counter trend opportunity, and if you are a scalper, you could actually take advantage of that bullish move even before the breakout of the resistance line of that descending channel happens. Now, what do you want to see on this chart that will give you that leverage to join? Sorry, there should be a note here, a precautionary note here. If you are not a scalper and you are not a counter trend trader, I would advise that you stay out of this, as this needs some level of attention to be able to manage this trade, as you want to be around on your screen to be able to move your stop loss accordingly to lock in some profit as price action moves in your favor. So what I'm trying to say here is for scalpers and counter trend traders. So if price action continues in such a way that it climbs above the $78 level and we begin to see buy pressure above the structure where sellers find it difficult to drop below the $78 mark, then you could think of joining a bullish momentum to the upside. Then after that, you would have maximized the profit here by taking advantage of that move, and if a breakout of that trend line finally happens, it will be an opportunity to add more position to your existing trade. So that is how we want to be taking this, and this is majorly for scalpers and counter trend traders. So that is how we are looking at buying opportunities on the US oil. If you have any questions whatsoever, feel free to let me know right in the comment section, and be rest assured that I am willing to be of help in that regard. Hey Steamroller, how are you doing today? I just saw your comment. Crazy at work, but great weather. All right. Trust you are doing well. I'm fine, thank you. Thank you for checking in. Hello Cast, good morning to you. How are you doing today? Trust you're enjoying your coffee. All right, so in the absence of no questions, I want to assume that we are on the same page here, so I will be diving right into the next option. So the next option we are going to be looking at this morning is the US tech. And on the US tech, we have been witnessing some choppy situations in this market, though we had some trading opportunity during the last 24-48 hours in this market. So let's quickly run through how the week has started for us on this option. So at the beginning of the week, we saw the situation here where price action was trapped within a channel like it has always been. At the beginning of every week, we saw price action giving us a little consolidation phase between the 13,120 level and the 13,075 area. And you know what we look out for whenever we have this kind of simple setup? We either wait for a breakout of that resistant line for buying opportunity, or a breakdown of the support line for selling opportunity. And you saw what happened here on Monday. Prior to our live session, we already saw the breakdown of that structure, and price was at that during the live session oscillating around the 13,100 level, and we agreed that we are going to be moving our sell stop order right below the structure so that we can capture that move. And during the New York session, we saw our price action broke down that level to trigger our sell position, and in fact price action moved about 95 pips in our favor before this bullish momentum began. Then on Tuesday morning, we saw the breakout of the resistant line happen here, where we had a buy stop order. Remember, we had a buy stop order above the structure, so we saw the breakout of the resistant line here, which triggered a buy position. Price moved about 85 pips in our favor before the sell pressure resumed here. And if you recall vividly, on Tuesday during our live session, I told us all that for those who had missed out on this opportunity here, that we should wait for price to do some retest of structure. It could be the 13,150 or the 13,120, where we want to be looking out for buying pressure to join a trend continuation to the upside. But unfortunately for the buyers, that did not happen, as we saw the significant engulfing bearish candles slicing through both structures to emphasize the strength of the sellers at this point. And during that New York session that day, we saw our price drop below the 13,075 level, triggering our sell position, and at the same time breaking down that bullish trend line that we identified at the beginning of the week. For the sake of clarity, I would like us to look at that on the 4 hours time frame so that we can have a better perspective into what is going on. So we had this bullish trend line identified at the beginning of the week, and it was also a key level for us to guide our trading activity, as we agreed that if price action continues to range above that trend line, we shall feel comfortable in a buy position, and if it breaks down that trend line at any point in time, we shall start considering selling the US tech. And look at what happened on a couple of days ago. We saw the breakdown of this trend line happen here, and during the early hours of later part of the New York session, we saw our price action came back to do a retest of that structure, which lines up exactly with a technical expectation that if price action breaks down a key structure like this, we want to see retest of level, confirming that price action will be going in that direction. And for those who took advantage of this opportunity, I'm so glad that you did this, and congratulations for you for being on standby to have caught that move. So if you still have a sell position running right now, my advice is that you want to be moving your stop loss accordingly, lock in some profit, and I think anywhere below the $13,000 mark seems most appropriate to lock in some profit at this point. So now that we have locked in some profit here, what is going to be our plans for the week, for today rather, and how far will this bearish move going to go? Now, one thing I would like to say here is this: after looking at how our price action started from the 13,200 on Tuesday, we had this impulsive move. We saw a retracement looking more like an harmonic move right now. How far will this go? The only way we can get this is by using our Fibonacci extension tool, and if we run it through the impulsive move before that retracement, we should be aiming at an area between the 127.2 and the 1414 area of that Fibonacci extension tool for our TP target. So that falls within the $12,850 level and the 12,900 area has our TP target. So we have a TP target within this 12,900. Let's round that off there. So we are around the 12,900 seems to be where the potential TP target of this bearish move is likely going to culminate, where it now depends on how price action reacts to that level that will determine if we are going to be adding more sell position to our existing trade, or we are going to be getting ready to buy the US tech at that point. So potential TP target labeled here, let's call it the 12,900 area, 12,900 zone. Okay, let me put it like this. Place it right inside the box, and we put it in the center and give us a yellow color. Here we go. So we have the potential TP target zone around that 12,900 zone. Now, if you are not part of this trade already and you're still thinking of joining this move, then how do we intend to sell the US tech for today? So the first thing I will do right now is to acknowledge the bearish momentum that started a couple of days ago. So by bringing our line chart, connecting the series of lower highs, we have this trend line. So I will give it a red color to emphasize its bearish strength. Then we bring back this. So this is what we have right now. So let me delete. I will have to delete one of these structures so that okay, I will delete this one and then extend a $13,000 further. That's a very strong, important key level right there, considering the round figure of that price. So I would want to see price action come back into the $13,000 level. So for those who had missed out on this opportunity, then you want to remain patient here, wait for price to, since we already have a breakdown of the structure with this beautiful engulfing bearish candle, and you know, from a technical standpoint, whenever we see price action break down a key structure, we expect that one point in time we are still going to see a retracement to retest that structure, where the appearance of selling pressure below that level on our lower time frame will give us more opportunities to join that decline to the downside. So we have the trend line and the $13,000 mark for another sell positions to be added to this current sell position. Now, as soon as price continues to the downside and gets into that TP target zone, I want us to remain patient at this point when price gets into the zone, as we want to see how price action will react to that zone to give us a clue into a possible trend continuation to the downside, or we might be getting ready to join a reversal pattern. So what we are going to be looking for around that zone are this that I'm going to illustrate right now. So if price action drops into the structure at any point in time, and we start seeing sharp rejection of that level, where we begin to see buy pressure resume on our lower time frame, and price action possibly transitions into a reversal pattern, then we might be looking at a buying opportunity to join that counter trend. And if that happens and price action continues to the upside into the $13,000 mark, as soon as it gets into that structure, you move your stop loss, lock in some profit, as we want to see how price action reacts to this level to determine if we are still going bearish or not. And if a breakout of the $13,000 happens, then the trend line would have been broken, which is a sign that the trend line is no longer strong to hold selling pressure. So if that happens, strong enough to hold buying pressure, and if that happens, then we are going to be looking at buying opportunities above this area to add more position to our buy trade. So that is one scenario from the TP target zone. And if price action breaks down the TP target zone to the downside, then we will have no choice than to look out for more opportunities to add more sell position to our existing trade. So the 12,900 area is a very critical point to monitor today if price action ever gets into that level. So let's keep this in mind while we continue to monitor price action in this market. So that is that on the US tech. If you have any questions, feel free to let me know in the comment section. So that is that on the US tech for today, and I will be moving on to the next pair. And the next pair we shall be looking at this morning is the GBPUSD. And so on the GBPUSD, we have been witnessing a very strong chopper situation in the last 48 hours in this market. And the week actually started on the bearish note for us. Remember, we had a sell position after price action broke down our key level, had the 1.2400 level where price action moved roughly about 50 pips in our favor before this bullish momentum began. And I told us all that we might likely be seeing a trend continuation to the downside after considering the impulsive move that started from the 1.2550 level. So I said that the bullish pressure we have been witnessing here could turn out to be a retracement of that impulsive move, and as a result of that, we ran our Fibonacci retracement tool through the previous impulse leg, identified the sell window here where we were looking out for an opportunity to sell at that point. And though we had some buying opportunity here, I told us all that we should be having our TP target for any buy position within the zone, and I think we saw a price action hit that area during the New York session yesterday. And since price action got into that sell window, it is interesting that we begin to see some selling pressure appear around that area. And look at what happened during the New York session yesterday. We saw selling pressure around the 1.24700 level, which happens to be the highest point price action has ever been for this week. And what happened immediately price got into that structure? We saw our price was finding lower highs, trapped within a consolidation phase here, where we still at this point don't have an headway of where price action will be going. So there is no trade running at this particular point in time. So what we are going to be doing now is to have a fresh new look at the market. Now, the first thing I will do at this point is to consider the bullish momentum since the beginning of the week, and that is why we have this higher lows connected to give us this bullish trend line. And if you look at this closely, you would notice how this trend line has consistently pushed price to the upside. Now, in the last 6-7 hours, we have seen a consolidation phase between the 1.24220 and the 1.24200 level to give us an indecision in this market. So personally, I would advise that we need to be very, very patient at this particular point in time before joining any opportunities in this market. So let's first of all talk about the potentials of the buyers in this market. So the first thing we are going to be doing is to use the trend line as a yardstick. So as long as price remain above that trend line, obviously we want to be looking out for buying opportunity. But the fact that we have been witnessing some selling pressure within that sell window we identified a couple of days ago around the 1.2470 level, this will make me to be very mindful of joining any bullish momentum above the 1.24420 level. You could risk it, but for me personally, I would rather see price action break out of that 1.24700 level, taking out all the sell position along this structure to give me a confirmation that buyers are gradually gaining some momentum. So instead of buying here, I would rather have a risk a buy stop order above the 1.24700 level with a stop loss of about 30-35 pips thereabout, where I have my stop loss hanging just right below the 1.24420 level to join that move. And the reason why I will be having a huge stop loss zone around that area is simply because of the presence of sellers around this area. Remember, this is a sell window, and we could see some retracement back into structure before the appearance of a bullish momentum could incite that continuation to the upside. So that is why we are going to be having a hanging a huge stop loss zone in this one. So that is how I'm going to be buying this one at this particular point in time. I want to see price break out of the 1.2470 level to give me a point of confidence to be part of a bullish momentum at this particular point in time. Now, in as much as we've been on a bearish note since last week Friday, and considering the impulsive move that we saw here on Friday that brought price into the 1.2350 level, and considering the potential of this move here turning out to be a retracement of the impulse leg, then a breakdown of this bullish trend line will be one thing I will be looking forward to be part of a sell move to the downside. So as this trend line supports the bullish momentum for us, it will also guide us to note if a selling pressure is gradually coming in this market. So I would want to see price action break down the trend line to give me a sign that sellers are gradually gaining some momentum in this market. Remember, we are not getting too excited after the breakdown of structure, as we still need some confirmation to happen before we want to sell the GBPUSD, and I would want to see a retest of structure happen before joining that move to the downside. And this could actually happen around this area, somewhere around here, probably before we join that move to the downside. But if it so happens around the 1.2420 level, that is a breakdown of the structure, I would have a sell stop order right below this level right away, waiting for price to drop below the structure, and continued selling pressure will definitely give me more opportunity to add more position at the breakdown of our key level at the 1.2400 level. So selling below the 1.242 should have a stop loss somewhere around the 1.24550, dovetailed into about 30-35 pips stop loss, and let's enjoy the ride to the downside. So I'm still thinking bearish on this one, but if a breakout of the 1.247 happens, then I would have no choice than to join a trend continuation to the upside. So that is what we are going to be looking at on the GBPUSD for today. If you have questions, let me know right in the comment section. I see your comment, Liberdade. Good morning to you. Hello, Ness57. Broly, good morning to you. Glad you having a nice moment out there. So with that being said here, and in the absence of no questions, I will be moving on to the next pair, and that is the XAUUSD. And on the XAUUSD, we have been having a choppy situation, though we had some sell positions yesterday and at the beginning of the week. So let's run through that quickly, and then let's look out for how we want to be trading this commodity for today. So now we are on the 1 hour time frame, and the first thing you would observe on the 1 hour time frame is the fact that price action has been bearish. We have lower lows here, we have lower highs, and in fact, to further emphasize the presence of the sellers in this market since the beginning of the week, I have this couple of trend lines here which has been guiding selling pressure in this market. So you can see at every point in time price action gets into the structure, we saw how bearish momentum comes in, negating all attempt by the buyers to break out of the structure. And not until 30 minutes ago now that we have a breakout of this trend line here at the $2,000 mark level. And at this point, we are at a critical point where the trend line also shares a confluence with that $2,000 mark. And remember how important the $2,000 level is for us. Remember, I told us at the beginning of the week that the $2,000 mark is going to be our yardstick for trading activity for this week. And now that we have a breakout of that $2,000 mark, and at this point buying opportunity is what we are going to be looking forward to. But at this point we are not jumping into conclusion, but for those who had bought above the $2,000 mark, I would advise you to move your stop loss right now, lock in some profit at your entry point, and let's wait and see how price action will react to this level. So I still need some confirmation here, as the breakout you are seeing right now could still turn out to be a false breakout. It's still very possible. So we still need some confirmation to reflect on the chart in the form of price action coming back to retest the trend line and the $2,000 mark, whereby pressure resuming above the structure will give us further confirmation that the bullish momentum is solid at this point, and then a breakout of the $2,007 mark will welcome more positions to buy the XAUUSD for today. So on this chart right now, anywhere above the $2,000 mark seems most appropriate to be looking out for buying opportunity. And like I said, if you had already bought above the $2,000 mark, you will currently be running with about how many pips right now? 40-45 pips in profit. Make sure you move your stop loss, lock in some profit, or move your stop loss to break even. And for me personally, I want to see some confirmations to happen, like a retest of structure, before I want to be joining that move to the upside. And if I miss out on this, it's okay. We still have a lot of opportunity in the market to take advantage of. So rather than jumping into jumping in front of a moving trade, it's better you stay on standby and wait out for more opportunities. So that is what we are going to be looking forward to buy the XAUUSD today. However, if something different happens in such a way that this whole structure here turns out to be a false one, then a breakback below the $2,000 mark will be an opportunity to sell the XAUUSD. But to sell it, we'll still need some confirmations to happen, like multiple rejections of the $2,000 level by the sellers, negating all attempt by the buyers to climb back above that structure, after which I want to be part of that bearish move to the downside. And in fact, we have key structures like the $1,992 level to be part of more opportunities to join the bearish move to the downside. So let's keep all this in mind as we continue to look out for more for trading opportunities. So we have a key level already, $2,000 mark. This level is going to be determining how we are going to be trading the XAUUSD today. Okay, I can see Miyagigi's comments. Miyagigi is asking, do you think I should close my sell position? I put stop loss at 2015. Well, that is quite a wide stop loss you have there, Miyagigi. That's like, where did you enter that trade? I want to know. If did you enter it around here? Where is that? That's like over 200 pips stop loss. That's quite a wide one. Well, personally, I would suggest you reduce your stop loss to around the $2,007 mark, and then wait and see how this candle is going to close above the $2,000 level. And if we start seeing, if after this we start seeing like a trend continuation pattern around this area, like a bearish rectangular pattern, like a consolidation phase, whatever it is, breakout retest of structure, then we might be in for a bullish move. But at this point in time, selling the XAUUSD, for me personally, it's most appropriate to be looking out for selling opportunities below the $2,000 mark. Remember, at the beginning of the week, we said that the $2,000 level is going to be our yardstick for trading activity this week. And I simply explained that anything below the $2,000 mark is where we are going to be looking out for selling opportunities in this market, and anything above the $2,000 mark is where we are going to be looking out for buying opportunity. So the key $2,000 mark right now is a very major yardstick to guide our trading activity. So right now the price is above the $2,000 mark. It is very risky to be in a sell position, so reduce your stop loss to around the $2,007 mark, reduce it a little further to that area, and let's see if the breakout of the trend line we are seeing here is going to be a true one or a false one, and only time will tell. I hope I made myself clear there, Miyagigi. All right, okay, you're welcome. So try to use that $2,000 mark as our yardstick for trading activity this week. So with that being said, here we shall be moving right into the last pair for today, which is the USDJPY. And on the USDJPY, we have been buying the USDJPY since the beginning of the week, and what we are seeing right now is price though has been on a bullish trend, obviously, but we have been seeing some choppy situation at every new high that we have seen in this market. And before I go into the details on this 1 hour time frame, it is very important that we refresh our memories on the daily time frame on what we saw in this market that led us into this point. And if you remember vividly that we had this potential reversal pattern that was identified on the daily time frame. So for the sake of those who are not part of the beginning of our live session this week, it is very important that you also are in the picture of what we saw on the higher time frame. So this is what we saw on the higher time frame. We saw this beautiful demand zone, an accumulation phase which lasted about 10 months in this market. So anywhere above the 131.00 level has been a very strong demand zone in the last 10 months. And one thing we saw during the month of February this year was the breakout of this bearish trend line. Remember, we had this bearish trend line figured out, and we saw price action break out of the structure in the month of February. And you all know what we look out for when price action breaks out of a significant structure like this. We expect that price action will come back, do a retest of that structure before another wave of bullish momentum will happen. And look at what we have here. We saw retest of that trend line following exactly with our technical expectation, and we saw our price action transitioned into a potential reversal pattern in the last couple of weeks. So we have a potential reversal pattern here, and you all know what we look out for whenever we identify such a reversal pattern. We want to confirm its validity, and the only way we can do that is to have a neckline figured out. And we did that at the beginning of this week, and that was at the 133.800 level, where we said a breakout retest of that neckline will be a confirmation that buyers are going to the upside on this one. And at the beginning of the week, we were part of this bullish momentum. Remember, I said on the 1 hour time frame that we have been buying the USDJPY since the beginning of the week, and in fact price action moved about 130 pips before we begin to see some selling pressure resume in this market. And for me, at this particular point in time, it is quite advisable to continue to look out for buying opportunity as long as price remain above the 133.800 level, unless we have a major significant sign that the buyers might not likely be capable to hold on to that momentum. That can we change our perspective into a bearish move. So at this point, we shall be scaling back down into the 1 hour time frame to see how price action has been evolving above that 133.800 level, which happens to be our key level for this week. So with the information we have here, let's scale back down into the 1 hour time frame. I only wanted us to see how important the 33.800 is. That is why we quickly had a look at the daily time frame here. So scaling back down into the 1 hour time frame. So let's go back into the 1 hour time frame right now, and let's see what is really going on since the beginning of this week. So look at what we have here. So that is the 133.800 level, which is our key level for the week. And as you can see, price action has been trading above the structure since the beginning of the week. And to further emphasize the strength of the buyers in this market, I was able to connect the series of higher lows here, which is giving us this bullish trend line that price action has consistently respected since the beginning of the week. And with that situation here, we'll have no choice, if price action remains above that trend line, to look out for more buying opportunity. But something interesting happened during the New York session yesterday, which appeared to have thrown a clog in the wheel of this bullish momentum that we are seeing right now. And that is the fact that we saw some sudden pressure somewhere during the early hours of the yesterday into the New York session yesterday. We saw the sharp rejection of the 135.100 level, as you can see here. Then we saw lower highs here as price action was finding it difficult to break out of the previous high, hereby giving us lower highs along the line. And this was a sign that sellers are gradually gaining momentum, but we cannot jump into such a conclusion at this point, as price action is still trading above that bullish trend line that we identified earlier. Now, with the situation here, another thing that I noticed since the New York session yesterday was the fact that we have been seeing buy pressure around the 134.500 level here. Look at what has been happening in this market. We have been seeing that every attempt by the sellers to break down the structure has been met with strong resistance from the buyers. The same thing also happened during the early hours of today, as you can see here, giving us a higher low. And whenever you see a higher low in the market, it's a sign that buyers are gradually gaining some momentum behind the scenes. But at this point, we still cannot jump into a bullish momentum considering these lower highs that we have here. So for me to buy the USDJPY today, I would rather see price action break out of the 133.750 level, which if it does break out of that level, we would have seen a breakout of this trend line that we have here, taking out all the sell positions at that area to give us a clue that buyers might likely be gaining a traction that might lead into the breakout of the 135.100. Now, if a breakout of this area happens, I want to see some confirmation. So we scale down to our lower time frame to look out for buy pressure, where we start seeing signs that sellers have lost that momentum to break back below the 133.750, after which we can be part of this move to the upside. Then a further breakout of the 135.100 would have confirmed that the sell positions here has been taken out. Then we could add more buy positions to our existing trade at that point. So that is how we are going to be looking out for buying opportunities in this market. And you all know what we do. We want to also consider the potentials of sellers as well. At least we have been seeing some selling pressure here since yesterday in the last 24 hours, where sellers had continued to negate the buyers' attempt to climb above that structure. And to further emphasize some buy strength here, we have the temporary demand zone around this area. So at this point, we are going to consider the potentials of sellers as well. What if the sell pressure we have here continues to get stronger in this market? So if we are going to be selling at this point, what do we want to be seeing at this area for us to be comfortable of selling the USDJPY today? Now you all guess right. I know you all know what we are going to be looking at by now. And what we're definitely going to be looking out for is a breakdown of that trend line. Of course, we have a trend line before, which we identified and said it's going to be guiding our trading activity for today. And if price breaks down that trend line, then it just gives us a sign that the trend line may no longer have the capacity to continue to hold that bullish momentum. And in fact, if price action breaks down the trend line, it would have also broken out that temporary demand zone that has been holding buy pressure in the last 24 hours. So if a breakdown of that structure happens, that will be a sign that we are going to be going bearish. But remember, we are not jumping into conclusion. Remember, we are still right above that neckline area we identified on the daily time frame. So we need to be very, very careful. We want to see evidence that sellers are actually strong in this market, and that the breakdown we are going to be seeing here will not turn out to be a false breakdown. So if a breakdown of that structure happens, we want to see some retest of structure where selling pressure continues, giving us a sign that buyers are finding it difficult to climb back above that trend line, after which we want to be selling the USDJPY. And if we sell below the 134.20 level, should be another opportunity. We move our stop loss accordingly, lock in some profit. Remember, we are above the 133.800 level. So as soon as price move to the downside in our favor, we move our stop loss accordingly. And it now depends on how price action reacts to that 133.800 level, that will now determine if the breakout of the neckline we identified on the daily time frame is truly a breakout or a false one. So if price action breaks down the 133.800 level to the downside, then we have no choice than to start looking for more opportunities to sell. But if we begin to see buy pressure resume above the 133.800 level, then we must have seen a breakout retest of the neckline we identified on the daily time frame to join a bullish momentum to the upside. Then we want to be getting ready to be part of that move. So that is how we are going to be trading the USDJPY today. I hope you screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision today. So let's remain patient. Let's wait for our positions to mature. Then we can be part of that move when it finally happens. So on this note, I would like to call it a day here. It has been a wonderful moment with you guys, and I hope you were able to take one or two things with you as we get prepared for the New York session. And for my newcomers in the house, you're highly welcome. I hope you are able to catch one or two things as well, and I assure you that with time you get to understand how this works, and you will be able to make your own individual decisions with the informations you have gathered here. So try to be part of this live session again. We are going to be repeating this again tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these pairs have been doing, and we're also going to be getting ready for the New York session tomorrow. Do have a wonderful evening, everyone, and I hope you see you tomorrow as usual. I see your comment, Miyagigi. You're welcome, and I'm glad you found the session useful. Yes, keep your fingers crossed. That is it. Trading is about patience. Let's keep our fingers crossed. Let's wait for our positions to mature, then we can just eat it at the right time. So thank you very much, everyone. Do have a wonderful and beautiful evening. Bye bye.